Rob, yeah, you were right, along with most of the economists that we've surveyed here. How hawkish do you think this statement was from the RBNZ?
Hi, Yvonne. It seems reasonably hawkish. To us, this isn't a one-off rate hike. This is the start of a rate hiking cycle. And we are at Nomura are expecting another 25 basis point hike next month in November, and more hikes as we get into 2022. I think the key point, as the RBNZ has stated, is the economy is showing symptoms of overheating. The labour market is very tight. Inflation is above target, and the housing market is booming. As Kathleen Hayes said, growing year on year, 26%. So, yeah, this is the start of a rate hiking cycle, and it's not just New Zealand. We saw Norway start hiking rates recently, the Bank of Korea. So some of the more advanced economies are starting to move.
Do we find ourselves in a situation here, Rob, to your point, that in 6 months' time, it's not just going to be the central banks we're thinking of right now, the BOK, the RBNZ, Brazil, what have you, but other central banks, given that inflation in many parts of the world are really above trend and target?
Yeah, I think that's really an interesting point, David. I think learning to live with COVID, I think, is important, right? I think businesses are adapting. New Zealand's a good case. It's just had another wave. But if you look at how the economy's handled it, it's been pretty resilient. Confidence has held up. Mobility has been a lot better. And so I think as we come out of COVID, and I think as policymakers start to focus on not just inflation and growth, but also the financial stability risks, I think they could start to sound more hawkish. And, you know, it is interesting. Some of these smaller central banks, New Zealand, RBNZ, RBA, Bank of Korea, in our region, are not just focused on the business cycle, growth and inflation. They're focusing on the financial cycle, right? And in particular, house prices. And the rise in house prices, overheated property sectors, is not just in Asia, it's happening in parts of Europe, the US as well. So I think there could be more focus on financial stability risks and starting to, the market, as well as policymakers, starting to focus on that as bringing that into the narrative as another reason for why interest rates need to get off these rock bottom levels.
And then you add an energy crisis along with all that, Rob. Is it just transitory for longer, do you think, or is it really persistent inflation that we're going to be dealing with? And how does that kind of break down for EM?
Well, that's a $1 million question, whether the inflation is $1 billion question, maybe, whether it's transitory or not. It's tricky with this latest power shock, right, energy crisis, because it lifts inflation, but it also is negative for growth. And over time, the hit to growth can actually slow the economy and then take some of the wind out of the sails of inflation. So, you know, I think we'll need to see. I think it's interesting right now looking at central bankers, most in the camp, and stridently so, that inflation is transitory. But really, you know, we're having rolling supply shocks. And the more supply shocks we have with this latest one, energy, the greater the risk that inflation expectations get unanchored. So it's very close. And I think, you know, the markets are right to start to question whether the central bankers are going to be correct on this. The risk is clearly that inflation stays higher for longer.